Good morning. Welcome to the B.F. Anderson Technical Report for December the 19th. Look, we got a lot to cover here. Let's get right into the charts. Looks good. NASDAQ making new highs. Moving average in an uptrend. Getting above average volume yesterday. Things look good on a daily basis. Now, on a weekly basis, we still have quite a bit of white space in here, which could set us up for some sort of a correction. But the moving average, the trend is up on a weekly basis. So far, so good. Now, this graph here is one that we've paid a lot of attention to, which is a ratio of NASDAQ versus consumer staples, or greed versus fear. Because if you think about it, if you are worried about recession, you're going to invest more in things like soup and toothpaste and consumer staples. And consumer staples are a defensive type of asset. So when this line is going up, it's telling you that technology, which is greed, is overpowering the fear of the consumer staples. So I mentioned last week that I have a theory, and here's my theory. Since 2009, we have not seen but one growth stock cycle like this that started in 13. So from 2009 to 13, it mainly looked like this the whole time. Now, 13 was a 1-year up cycle. Then we went into 24 months of no trend. Then we had a major drop, formed a bottom. Then we went into an uptrend that lasted 28 months. Now we're peaking in June of 18 and going, had a major drop off here. This was very, very difficult. So a lot of fear came in. That's when the yield curve inverted and everyone started screaming recession was coming and all that. So there was a big fear of recession in here. Now that appears to be stabilizing, and it looks like we're coming out of it. So I don't think we're coming out of a recession. We're coming out of the fear of a recession. So what this all means to me is this. In order to get the masses to come into this market, which they're not, the most people are not interested in the stock market right now. However, if we get, being that this was a 1-year move here, and then we got basically over 2-year move here, does the next move maybe 4 or 5 years? So what's really going to get the masses coming into this market is if we get a growth stock cycle that lasts more than 2 years, more like 3 to 5 years. So 1 year sideways, 2.5 years now sideways, and we're breaking out. Now the indicator is on a buy signal, as you can see. This is an important indicator. Now this is just another way to look at the same thing. This is a technology sector fund versus a consumer staples sector fund. You can kind of see the basic same pattern. We got the big fear coming here. Now we're starting to come out of fear. We're starting to get into greed. Hopefully this lasts. Now the other good news here is this. The global Dow is breaking out. This is the first new high for the global Dow since the beginning of 2018. So in other words, 18, big drop, consolidate. Now we're breaking out. So the international stocks are starting to break out. Now on the value line geometric, now again, this is an important index because it's a 1,700 stock index where every stock is equally weighted. So when this index gets going, like it did back here in 91 to 98, this is where the broad market is moving. In other words, it's not just a select few of companies that are driving the S&P or driving the NASDAQ. So if you look here at the value line geometric, we rallied and then we pulled back, but now we're starting to go into an uptrend, and a breakout above 550, 560 would be like the global Dow. It would be like a breakout. So it's looking better. Now, on the small cap stocks, now remember now, small companies grow faster than large companies, and so that's where the real opportunity lies. Well, we've gotten what we call a golden cross here. Now, this is the 200-day moving average versus the 50-day moving average, and we've gotten a golden cross, which is a very positive sign. Now, on the MACD, this is the MACD, which is the moving average convergence divergence oscillator, and it looks really good when you look at it as a histogram. Now, what you need to understand is we get the buy signal when we cross above the zero line. Then the momentum builds, momentum builds. You hit a peak in momentum, and then you start to taper off. Then you go into a bear market. Then you start a new bull market, and it tapers up and then tapers off. Last year was a bear market as far as this indicator is concerned, and we're just now in November getting the first buy signal on this MACD indicator, in about a year and a half. So the thing that's interesting about this is that most people will want to put money into the market up here, and that's always a mistake. Most people, we try to get people to put money in the market in this area here. They won't do it. People just won't do it because, again, this is greed, fear, and now we're going into greed. So looks good. Now, just to kind of go back in time and just kind of look at the MACD in a certain situation, this is 2007, 2008, and this is what I would propose to somebody that would be worried about a potential bear market. Well, to me, if you look at the 08 bear market, the MACD gave a sell signal right at the beginning of 08, and then the moving averages that we use, which is a monthly indicator, this is the 10-month versus the 20-month moving average, we got a death cross shortly thereafter. So, in other words, the MACD tend to lead the death cross. So if you get both of these going for you, well, you can see where really bad things happened. Well, then you get a bottom, you get the MACD buy signal, then you get the golden cross. I think this will be very helpful to use in the future. Now, here's a MACD analysis of the small cap stocks. And the only point I want to make there is that the small caps have not given a buy signal yet, but it's definitely improving. We're starting to see greed coming in there. Then if we look at the value line geometric, which again is a very broad index, again, it has not given the MACD buy signal, but it's improving. And I would say pretty definite it's going to give a buy signal. Excuse me, I'm getting a phone call. All right, let's get into the top five. Lam Research, which is a semiconductor manufacturer, new high, looks very good, nice positive uptrend. This is Qorvo, which is a stock we own. We own this stock, gave a nice buy signal on its earnings report, strong uptrend, and they're mainly involved in antennas that go into the 5G devices. Skyworks, same thing. They make the antennas. Again, you can see a new high there. This group is looking very positive. The semiconductors have really come on strong here. This is Target, which would be probably one of the strongest retail stocks. In fact, I did a comparison of Target to Amazon, and Target stock is doing dramatically better than Amazon's. What does that mean? Tesla, very interesting. The company may have a major breakthrough in battery technology. They made an acquisition of a company called Maxwell Technologies. I recommend you Google Maxwell Technologies / Tesla. Read about it because it's very interesting. You know, there's a book out by a guy named Nicholas Darvis where he talks about how he made, this was back in the 1950s, he made $2 million in the stock market. And his biggest winner, the one that took him over the top, was a company called Thiokol Chemical. And Thiokol Chemical invented and had a breakthrough in solid rocket fuel. So it's basically what's going on with Tesla is they may really have something when it comes to their new battery technology. We'll just have to see. But if you have any questions, give me a call. Thank you very much.